Welcome to the Deep Dive. This is where we take your sources, your notes, all that research, and really pull out the key insights for you.
Mm-hmm.
Today, we're looking at a really interesting story. It's the journey of a fund manager, starting from what they called an 18-tier county in Shandong.
Which, for context, means a pretty small rural place.
Right, a huge contrast to Shanghai, where they ended up building this, very successful career in finance.
And we're drawing this from an interview they gave sharing their story and some hard-earned wisdom.
Exactly. So our mission here is to unpack that path they took, get a real feel for the finance industry from someone in it, and find those lessons, about careers, growing as a person, navigating this, constantly changing world.
Sounds great. It's a fascinating trajectory.
Okay, then, let's dive in and unpack this journey.
So the starting point is pretty stark, isn't it? High school in Shandong, they described it as monotonous.
Yeah, really intense focus just on learning results, exam scores.
Like a military routine, almost. 6 a.m. start, evening study till 9 p.m. Very disciplined.
And interestingly, they said they didn't feel personal stress, just focus on the task.
Right. Which is quite a contrast when you look at their life now as a fund manager in Shanghai.
Totally different. How did they describe the work now? It's not project-based, is it? More continuous.
Exactly. Continuous. Always researching, looking for the next investable stock. It's not like you finish one thing and move to the next. It just keeps going.
And that work-life blend sounds intense, too. Weekends involve work, even with family around.
Yeah, work alongside time with the kids. Evenings might have phone conferences, meetings with companies.
But it's not mandatory overtime, right? It's driven by competitiveness.
That's how they put it. Driven by the need to maintain competitiveness. They admit there's pressure, for sure, but they also said it wasn't, quote, unbearable.
That shift, though, from the rigid high school structure to this self-driven, constant flow in finance.
It's fascinating, isn't it? What strikes me is how that working style evolved. From, like you said, almost military discipline to something highly self-motivated, this continuous engagement.
Adaptability seems key there.
Absolutely. You really have to be able to manage yourself and stay driven in that kind of environment.
Okay, so let's rewind back to that big fork in the road. University and major choice after high school. They mentioned having no clear goals.
Yeah, and not much guidance either from parents or teachers back in the county, which is, I think, a pretty common experience for a lot of people.
Definitely.
Yeah.
It raises that big question, doesn't it? How do you make those huge life choices when you're sort of flying blind?
Well, for them, the approach was quite practical, almost strategic, even without clear guidance.
What were the criteria?
3 main things. First, get to a bigger city, easier to find a job later. Makes sense.
Okay.
Second, pick something economics related. Why? Better income potential. Again, very practical.
Right.
And third, look at university rankings. Just trying to aim for the best platform they could get.
So logical steps, even if the final destination wasn't crystal clear yet.
Exactly.
And the specific choice was interesting. A finance department, but inside a comprehensive university, not a specialized finance school. In a top city.
And the big draw there, flexibility.
Oh, okay. How so?
This program lets students choose their specific major from 6 options after the second year.
Oh, wow. That's a huge advantage.
Especially for someone who admitted they were not very clear on exactly what they wanted to do within finance back then. It gave them time.
Breathing room to figure things out.
Precisely. And they actually used that flexibility. They switched their focus specifically to finance after those first 2 years.
So that choice really paid off. It shows the value of keeping options open when you're young and maybe unsure.
Definitely a strategic move, whether fully conscious of it at the time or not.
So as they're making these choices, getting into the field, what is finance from their perspective? For those of us maybe not so familiar with the nitty-gritty.
Well, they boiled it down to its essence. Capital allocation.
Capital allocation.
Okay.
Basically, moving money around efficiently to get better returns. You've got the financing parties, people or companies needing money, and the investing parties, those with money to invest.
Right, connecting the two.
Exactly. And you can see how all the different parts of the industry work together to make that happen, moving capital through the economy. It creates the whole landscape where a fund manager operates.
And they mentioned several major categories within the industry. Could you break those down for us?
Sure. They laid out 4 main types based on their experience and how they saw the industry structured.
Okay.
First, banks. Pretty fundamental. Their main job, gather savings, lend money out, mostly to businesses.
Standard banking.
Right. They make money mainly from the interest rate, spread the difference between what they pay depositors and charge borrowers. They're kind of the starting point for turning savings into capital.
Got it. What's next?
Second, securities companies. These are like the domestic version of international investment banks. They do a few different things.
Okay, like what? There's investment banking, IB, that's helping companies raise money directly, like through issuing bonds or doing an IPO, going public.
Mm-hmm.
Then there's brokerage. That's helping investors, individuals, or institutions buy and sell stocks and bonds, opening accounts, executing trades, charging commissions.
The part most people interact with if they invest.
Probably, yeah. Then there's proprietary trading, or prop trading. That's the firm investing its own money trying to make profits for itself.
Okay. Using their own capital.
Exactly. And finally, within securities firms, there's asset management. Bigger firms also manage money for clients, creating funds or products and charging fees for it.
So they cover quite a bit of ground.
They do. The third category is fund management companies. This is where our speaker ended up.
Right.
These can be public funds, 우체, 공무지진, open to everyone, or private funds, 백한이노쿠신스, 시무치진, more for sophisticated investors, maybe higher minimums.
And their main job.
Pure asset management, or as they put it, daikelikai, basically managing wealth on behalf of clients. Collect money, invest it, earn fees.
Okay, clear. And the last one.
Number 4, insurance companies. Maybe not the first thing people think of in finance, but they're huge players.
Really? How so?
They collect all those premiums, right? And they have to invest that massive pool of money somewhere. Our speaker mentioned they hold trillions in stocks, tens of trillions in bonds.
Wow. So they're major investors themselves.
Absolutely. Often very long-term investors. So understanding how all these pieces, banks, securities firms, fund managers, insurers fit together is key to seeing the whole capital flow picture.
That's a super helpful breakdown. It really paints a picture of the ecosystem. Now, here's where I think it gets really interesting. How did our speaker actually develop their personal interest in investment? What pushed them down that specific path?
Right. It wasn't just the academic track. They pointed to 2 major events during university that were like a real-world crash course in finance.
Oh, like what?
First was China's huge stock market bull run in 2006-2007. Remember that. The Shanghai index went from like 900 to over 6,000 points.
Crazy times. Yeah, I remember the buzz.
Exactly. They said it created this general craze for stocks. Even students felt it. It was everywhere.
So unavoidable exposure.
Pretty much. And then boom, the second event. The 2008 global financial crisis.
Right. A much harsher lesson.
Yeah, the biggest crisis since the Great Depression. They described it as providing living cases of how financial systems can break down. The causes, the absolute disruption, the slow recovery.
That must have been incredibly impactful to witness while studying finance.
Profoundly so, they indicated. It wasn't theory anymore. It was happening right there, in real time. A very direct education in risk, systemic problems, everything.
So those 2 extremes, the manic bull run and the devastating crash, really cemented their interest.
It seems so. They saw investment as, yes, potentially well-paying, but also giving exposure to lots of different industries, though they did acknowledge later how difficult it actually is.
Did seeing the '08 crisis firsthand change how they thought about risk, you think?
They didn't spell that out directly in the interview snippets we have, but you have to assume it provided a very sobering practical education in market dynamics and downside risk. It wasn't just numbers on a page anymore.
Makes sense. So after these experiences, what were the practical steps? They realized they needed more education.
Yeah, they figured out that for the kinds of jobs they were interested in, you often needed a master's degree or above, so they went and got one.
Okay.
And crucially, they got internships, real-world experience to bridge the gap from academia to landing that first proper job after graduating.
And looking back, they seem pretty satisfied with how it all turned out.
Yes, they described their path as a straight line, remarkably few detours. They chalked it up partly to luck, maybe the timing of those market events focusing their interest, but also, importantly, to finding something they were genuinely interested in and sticking with it.
That combination of external events and internal interest. Powerful. So thinking about all this, what does it mean for you listening now, maybe considering your own path?
Yeah, that's the million-dollar question, isn't it?
And it leads perfectly to the final part. If they could go back, what advice would our fund manager give their younger self? Especially around those high school and university decisions.
They offered some really clear practical advice, 4 main points.
Okay, let's hear them.
First, for high schoolers, Focus on scores, especially for the Gaokao, that big college entrance exam in China. Why? Higher scores mean more freedom of choice later. It's the key that unlocks doors.
So prioritize academics above all else at that stage.
Pretty much. Other interests are secondary unless they somehow help your scores. It sounds harsh, but it's strategic advice for that specific context.
Got it. What's number 2?
Understand your interests. Before picking a major, try to get a feel for your general leaning. Are you more academic? Business-oriented, into something super technical like medicine?
Self-awareness.
Crucial. They really emphasized interest is the best teacher. If you love what you do, or at least find it engaging, work becomes more effective. You do things better with less struggle.
Find your passion, essentially.
Or at least your strong inclination. Third piece of advice. Embrace bigger cities.
Go where the action is.
Kind of go to first or second tier cities, or even just somewhere further from home. The idea is that different cultures, different cognitive environments, meeting diverse people, it all enriches your perception.
Broadens your horizons.
Exactly. Gives you more perspectives than you might get staying in a smaller, more familiar place.
Makes sense. And the last one.
Fourth, consider comprehensive universities. Unless you're absolutely set on a very strong technical specialty like engineering or medicine.
Why comprehensive?
Because they offer wider exposure. More diverse students, more varied majors, more viewpoints. Echoing their own experience, that breadth can be really beneficial for growth, personally and professionally.
So, summing that up, nail the academics for options. Know yourself and your interests. Get out into bigger, diverse environments, and maybe choose breadth over narrow focus early on if you're not 100% sure.
That pretty much captures it. Solid advice, I think.
It really is. It's almost like, that intense high school focus, while maybe monotonous, built a kind of discipline.
Possibly, yeah. Maybe an unintended foundation for the kind of focus needed later in their finance career. It's an interesting thought.
A surprising link between two very different life stages.
It really underscores that idea of continuous learning, doesn't it? How experiences build on each other. This whole deep dive, I think, really highlights how important it is to understand your environment, yes, but also your own evolving interests. That's what guides you through the big choices.
Self-awareness in a complex world.
And the power of real-world experience, those living cases they talked about. Plus, just accepting that learning never really stops.
Couldn't agree more. So, a final thought for you, our listener, to maybe chew on. How could actively seeking out your own living cases, those real-world events, diverse perspectives like our speaker encountered, how could that accelerate your understanding and shape your choices, whatever field you're in?
Good question to ponder.
Definitely. Thank you for joining us on this deep dive.